Monday. Welcome back to the Poll Report. It's a weekly outlook. September 26th through the 30th, we're going to wrap up Q3. Pretty wild evening in currencies. Had a bit of a flash crash, which I've only been dreading and warning for, 3-4 months. We finally had one, but it was on the pound crosses, not the dollar, not the yen. So anyway, here we go. This is a currency strength chart. Massive flush on the pound crosses all the way down, strength of the vertical axis side, like 400 to the downside. But what's interesting is last week on Wednesday was CPI, Thursday, Friday, big sell-off and capitulation move. So it seemed on Friday, I did pick up a couple of trades. My euro pound, let me go to my chart here. Let's do this. So I was filled on an entry on the pound US dollar. Pound US dollar was filled around 104. It was actually a pending order at 105. And so I was slipped, filled around 104.02. I just took profit this morning for around 400 pips. Now, I am still looking for more as the overall position unfolds on the pound US dollar. I am braced for potentially parity, 1.00. So let me bring up the drawing tool. Just give me a second to let that load up. And let's say hi to everybody on YouTube. We are live right now. Yes. All right, give me a second to get logged in. All right, make sure this is pushing through on YouTube. It is. All right, perfecto. Okay, Gary's in the house. Nice to see everybody. Chris is here. Not me, Chris B. All right, so we're live. So I got slipped on the entry as a pending order at 105, and I have another one at 1.0050. So I was slipped positively on that entry. I was filled around 104.02, took some profit this morning. The other one I was filled on really was amazing. This is the euro pound, and here's the weekly time frame. We had an event at Market Traders last week called Mind Over Markets, and I just told traders this is a set it and forget it level. I put a pending order at 9,200, and it got filled at 9,200. I'm going to check my MetaTrader 4 because it was also up 300 to 400 pips. So let me see where that entry was in that little MT4 history. It was filled at 92.63. So the high of the candle, that was a pretty darn good fill if I do say so myself. The high was 92.77. I was filled at 92.63. And the pending order, like I said, was 92.50. So slipped by about 13 pips on the entry, but it filled nonetheless and ended up closing that out for, let's go calculator here, 9263, closed it out at 88.80. That's a positive 383 pips. So plus my 104.02, 383, and then 402 minus 886, that's 484 minus 383. So just in two little slipped flash crash entries, I just closed out this morning for 867 pips. So not complaining at all. Obviously, some of these pound crosses have been in deep trouble, and it is what it is. But this is why looking at your charts and looking at the higher time frames, you find these levels. Was there any reason? I mean, look at this euro pound, for example. Was there any reason for this to happen? I mean, we're trading at 8,900 from the close last week, and this thing shoots up 300 pips in a second. But that's what flash crashes do. They still obey, So if you're ready for levels like this, I mean, this is, I'm not saying that I'm like super skilled here. It's just a technical level that I watched and I set it up. So, 1.05 on the pound US dollar, 1.00 on the pound US dollar. I'm also at 9,500 and 9,000 on the euro dollar. So fact of the matter is it's happened like this before where a handful of flash crashes over the last decade. If you set some pending orders at highs and lows, it's pretty amazing what happens. You get filled with those levels, the market react to them. And, those flash crashes create massive inefficiencies and the market quickly comes back. So in this instance, I mean, there's your flash crash move in a moment. And from that point, as soon as that high and low is formed, the market spends the rest of the time going back. So again, I'll take it, right? I'll take the 800 pips and I'll just call myself lucky on the day. But, you see this enough. I've been warning about flash crashes. We've been watching these pound crosses. We set some levels up ahead of time. And it's not like I just traded the flash crash in the moment. These were pending orders ahead of time. Okay. So MT4, yep, that's a good question. I wanted to address that. So a gentleman that I've done some trading battles with, Nick Syack, did a video on it on YouTube. I'm sure there's other news that's coming out. I am going to check and see what's going on if brokers are going to start restricting it, because I'm logged into my MT4 platform through Oanda. No problems with it. So what I look at doing, Benji says hi, by the way. What I look at doing on an MT4 is don't touch it. If you have your platforms running and your brokers are still allowing you to log in, don't mess with it. On my app on my smartphone, I'm not going to update it. So, you know, and I'm doing that because I have a copier service that uses MT4, and I'm hoping that doesn't get disrupted. Now, if it does, I still have logins. I still have the ability to manage everything manually. That's just a massive inconvenience. So I'm not really sure what the end result's going to be with MT4. You know, MetaQuotes is a company that does have one of their offices in Malta. So I don't know if they can just start kind of transferring over headquarters, if maybe there's a solution in the near term. But I'm just throwing this out there. If brokers wipe away MT4, you are going to change the landscape of retail Forex trading. Anybody that trades automation is probably trading MT4, MT5. So you take that away, that's going to disrupt a lot of trading. There's going to be a lot of unhappy retail traders. Now, you know, is that the end of times for Forex trading? No, there's going to have to be, you know, some type of alternative. And I don't know if there's a grace period. I'll do more research. I'll figure out what's going on this week. I'll contact some people in the industry to find out if they have, you know, their finger on the pulse or whatever. But anyway, that's what I'm looking for. So like I said, if you have it on your smartphone, don't update it. But I believe it was removed from the App Store. If you have it on a broker platform, see if there's any notifications or emails coming from your broker saying this is going to be discontinued. I haven't seen that yet. So I'm hoping there's no disruptions from my trading, especially when it comes to my robots. But if there is, then, you know, I will make adjustments. So that is that. Okay. All right. So let's get to it. Let's get cracking this morning. I'm going to take a look at, you know what? I think I'm going to reissue this trade. So I took my profit on the euro pound this morning. I'm looking at 92.50 again. I'm going to go ahead and set that up for another pending sell. I'm going to look at a pending sell 92.50. So I'll just set that one up again. And sell at 92.50. That's just going to be a reload trade right there. And then I took profit on the pound cross, pound US dollar, but because the low is around 103.70, 103, I've got a wick low on my broker platform here, is around 103.50. So I put in a pending order. This low, what's this wick low here? This is FXCM feed. That low is 103. Yeah, there's 103.60 right there. Okay. So I put in a pending order, pending by 1.0375. That's a bit of a reload just in case. Sometimes when we have these flash crash moves, you'll see something like this take place. Let's go to the daily time frame. And let me double check on this restream side, make sure we're coming through loud and clear. Yeah, we're good. Okay. Yes. All right. Good morning, Brad. Good morning. Ever. Good morning. Moch. Good morning. Yeah. So with the flash crash move, in case we have something like this taking place, where flash crash move to the downside, if we have the market trying to come back and retest those lows, I'm looking to get filled those lows and then see if we can come back up and fill that pocket around 112. You know, again, you have to remember some of these flash crashes, they do put in bottoms. Okay. So in the event that, you know, this was kind of the final hurrah for the pound, I would be also looking for some reversal patterns like a cup and handle. If this starts to head back up here and then pauses, I would look for a break of this to start heading back up into this 120 handle. Now, does that mean the pound is stronger than the dollar? I mean, all it really means is this move is over, you know, and I don't know if that's the case, but I'm going to put in another small order at 103.75. I put in originally at 105.00 and got slipped down to 104. So I'm just glad it took the entry, number one, and I was able to grab some pips out of that. But rather than sitting here holding on to it, I do think that, you know, if you're looking for short-term opportunities, I would be very bullish on this pound US dollar towards this 112 handle. Okay. Towards the 112 handle. Now, to say that, I'd still want to go down to a smaller time frame and see if you can align some bullishness But like I said, a lot of times we'll see flash crash move, market comes up, stalls. It might come back and retest the lows, but fail. And if it does that, that's when you start to see that bullish move back up to 112. We might be putting in a massive bottom. We have past levels of support way up here, or resistance in this case. So, I'll watch this price action really closely. All right. And give me 1 second to send a message here. I know you can see this, so I'll get this out of the way. You don't need to see this. I have some to attend to today. Give me a second. All right, we're good. So quickly on the pound US dollar, the flash crash, what do we think? We good? So pending buy at 103.75 to see if we get the lows. I also have a pending buy off of parity 1.0050. I'm still looking to scale into this. Right now, that's the beauty of trading small, because without that, I mean, how many traders last week were? I'm curious, and I looked at this last night when the market first opened. If you go down to a 5-minute time frame, there was a slight gap. I don't know if this price will reflect it or not. Let me see. Yep, right here. So I looked at this on my phone. I was really tempted to take some trades on the pound crosses. There was a pound yen gap. There was a pound dollar gap. And right here is really interesting. And you know what? This is pretty crazy, because, this gap right here, and this is what we see in Forex over the weekends, especially. Number one, there's hardly any gaps in Forex from even a Friday to Sunday. But if there are gaps that are noticeable, anything that's, I don't know, over 1 or 2 pips. I mean, when you get 10, 20, 30 pip gaps, in this case, let me find out what this was. So our close was around 108.50 and we opened around 107.90. That's about a 50 to 60 pip gap. Now, in my experience, I see that the market tends to close these gaps. So I'm sure there was some heavy trading going on right there. But what's insane is we filled this gap, and then again, not too much after that, we just flushed. I mean, it looks like it was in about a 20-minute period, but man, that is a lot of movement. That is a 300 to 400 pip move in 20 minutes. So it's not an instantaneous flash crash like we saw back in 2015 and some of the other ones, but still, that is a very determined move to the downside to kind of put in this bottom. And what did we do? We came all the way back up to this level. So this is where I'd be looking for price to figure out what it's doing next. We're stalling right here. We come up, check this out, daily and weekly pivot. Could be a really easy price target for this morning. That's around 109.50 to 110. If we start to get some consolidation in here, off the flash crash low, consolidation, and then look to see if that can break and go up. Or like I said, we pull back and we fail to take out the low, I'm looking for levels to buy. So again, I'm glad I took some profit. Now I can let price do what it needs to do. For the SPY this morning, 366.95. We are looking at a pre-market open slightly softer. Let's go to a higher time frame. So big gap to the downside. Again, a lot of this is getting priced in from Wednesday CPI data. Everyone's upset with the Fed. They've moved the target once again by another 25 basis points. The market's anticipating by December around 4.5 to 4.75% for the U.S. Also into February and March of next year, they're looking at another 25 basis points to get up towards like 4.75, almost 5%. Now, if you are interested in search of green marbles, here's a really interesting podcast. Give it a listen. This is from White's Capital Management. Lundy was one of the speakers here. So this is a great podcast. Jordy Visser, Lundy Wright, Mike Edwards. But check it out. You can get it on Apple Podcasts or anywhere else, Spotify, I'm sure. But let me see if this will pop up with a current episode. That's Jordy. All right, so they didn't post this one yet. That's weird. So this was a couple weeks ago. This is with Jordy Visser. The one that I listened to, I just had it on my my smartphone. It was with Lundy Wright, and he was talking about where the Fed is at. So I'll paraphrase, and again, feel free to give it a listen. It's called In Search of Green Marbles. I'll type it in the chat here. In Search of Green Marbles. Latest episode. what was the Fed date? The Fed date was the 22nd, I believe. So 21st. All right. So it was episode from September 21st, post FOMC. And Lundy Wright is the speaker, and he just lays it out. He just said, okay, so let's say the Fed has two choices. Do you want a recession, or do you want a recession with inflation? So is it door number one, door number two? And it sounds like the smarter play would be door number one. We're going to have a recession. We have one of the deepest inverted yield curves in a while. The Fed has clearly caused a lot of pain in the market. Equities have sold off pretty hard. Is it a soft landing? Not yet. The markets are increasingly, moving the target to the upside. But the reality is, are we going to have a recession with inflation? That's going to be a lot harder to deal with than trying to tackle and squash inflation. So give that a listen. It's about 20 minutes. But it does a pretty good job of summarizing where the Fed is at, and most likely where they're going to stay and remain over the coming, probably 3 to 6 months. So what we don't know is, of course, does last week's close, getting down towards this 362 low on the SPY and retesting some of the lows at 274 on the Qs, are we going to bounce hard off of that and start to fill some of these gaps, or is there actually more to the downside? Are we going to look at, okay, we open slightly lower right here. We have a gap to fill this area, that 390 break. So today, in fact, at the top of the hour at 10 a.m. Eastern time, my Equities on Demand trading room, we're going to take a look at all of our in-the-money bear call spreads. We have a 360 by 365. We have a 390 by 392. That's in profit. This is in profit. I might just start to protect these profits just in case, because I'm not going to wait until January or March. Realistically, do I think by January, March, this market is still below 360? I don't. So I will probably end up just taking profit on these trades. I want to look and see where I'm at on the VIXM as well. That's another hedge that I played for the last month or so. So, I'm going to forfeit some of the overall profit just based on the time. But still, it's a nice way to at least make a few bucks on the downside. All right. So anyway, that's that. But it's going to be an interesting week. Remember, September historically for the last 50 to 60 years has only finished. For the month, the month is actually negative historically. So it's called the September effect for a reason. It's usually one of the worst performing months in stocks. But then you get right back into Q4, October through March. That's usually the best stretch in stocks. So it's going to be a really interesting way to start off. Number one, we have to end this week. So whether we end on a sour note or a positive note, I'm not sure yet. We'll find out. And then how we kick off Q4 is going to be something we really want to pay attention to. I would not be surprised, and I'll just throw this out there. Let's say that, Friday was a terrible day and it kicks off where Monday's not any better. So let's say that we flush down a little bit lower. We do take out these June lows. I'm going to double check my research here, but I don't know if that's ever happened. For as bad of a start as we had in the first half of this year, I don't know if we've ever taken out those lows in the last 60, 70 years. Now I'll find out. But if we have not, that's a pretty interesting footnote to have, oh my gosh, so one of the worst, second or third worst starts in history, the S&P, and we still take out the lows. Okay. Step number one. Number two is, remember that March high is around 340, and on the Qs, the March high from 2020 is around 240. So those are also massively important levels of past resistance becoming support. And I do think that the market finds a way to rally from there. And, the market could still be digesting Fed stuff. But remember, the market is trying and always trying to be a forward-thinking mechanism. And so if the market is trying to say, you know what, we have finally priced in where the Fed is going to be, 4.75 to 5%. If they don't go higher than that, then the market may be peaking that Fed funds rate and looking for a bottom in equities. And even if there's bad news, we can see the equities market rally on bad news because it's finally priced in what was really the more driving force, which is the Fed. All right. But I'm looking at it from a technical standpoint. We would have some support in here that would make some sense, equal lows. But if we drift a little bit lower, complete this fifth wave move, come back into that pre-COVID high, really interested in getting some long positions going there. Okay, so just throwing it out there. Technically, this is what I'll be watching this week in the Flex Room and Equities on Demand. Volatility index, big spike up last week. We're probably going to fill some of that gap early on, but we're definitely catching up. Here are the Qs. Equal lows, that's around 270, like I said, and that pre-COVID high is around 240. So are we heading lower? It certainly could be the case. This could be a fifth wave move on the Qs. So high to low, lower high to lower low, lower high to lower low. right? We flushed out. Now there might be some support in here. There may be a little bit of a dead cat bounce. I'm not sure. Let's see what price does. But if it goes lower, we're opening up pre-markets right around where we closed on Friday. So we're going to see what this market brings us today. If it's another red day, then we're just going to complete this fifth wave, come back down to pre-COVID highs, and I'm looking for buying opportunities right there. Okay, so that's what we're going to watch for. Let's get into some currencies. We'll go to the DXY. Obviously, with that big change, again, this is the daily time frame. So the daily candle, I'm really loving the look of that long rejection candle, but there's a long ways to go to the downside. Now, there's a pretty appealing bar count right here. I'm not saying this is the top. We might have a little indecision today, but the market's done that before. We have indecision here, flushes down a little bit, goes higher. Indecision here, flushes down, goes higher. So we might have another pullback towards this 50 EMA, and the dollar continues to go up, right? And look at this trend line. Until this trend line breaks, right? Until this hand-drawn trend line breaks, I think it's hard to be bearish on the dollar. Now, we can be bearish in the short term to look for something like that, but this is the EMA that I'm after. I don't know. I'd almost rather see that we have a big indecision candle and we start to come back into some pockets, and I would be pretty bearish going into that 50 EMA. But the market has to prove that it's willing to break this. We break this level, come back to the 200, we can at least have a three-wave move. That's really the only correction I'm looking for on the dollar index right now, a three-wave move. So a little tiny retreat to the 50 is not a three-wave move. If it's high to low, lower high to lower low, that's a three-wave move. That would count. That's a correction on the dollar, right? But if all we do is drop into this 50 period right here and then head back up, we still haven't seen the correction yet. Okay, but I think we're getting closer to where the market's able to price in where that Fed is. So here's the Fed watch tool, and this is a discussion we had many times last week. Probability is another 75 basis points for November and a 50 basis points hike for December, puts us at 4.25, 4.5. Going into next year, 4.25, 4.5. Go to February. February looking for a 25 basis points hike, and March is split right now between a no hike and a 25 basis points hike. Now the probability right here is 25 basis points higher. So November, December, February, and or March, you're looking at 1, 2, possibly 3 rate hikes in the next 3 to 4 FOMC meetings. But is the market properly pricing this in? Are we going to see the Fed at 5, 6, 7%? I think that's tough. I mean, they're already saying things that are restricting the market enough. We've already scared the markets. I think they've done a pretty good job of that. They're going to continue to cool down housing. They're going to suppress everything to make growth restrictive. And that's why I said door number 1 is recession, which is likely here and coming and felt. Okay. Door number 2 is recession with high inflation. So I think the Fed, if they're choosing what would be probably the logical path, that would be a recession with lower inflation. So they are going to do what they can to curb inflation, and they're doing a pretty good job of it. But the CPI data continues to come in. It's not just CPI. There's also PPI and other things that follow along with it. But we need to watch those trends. Okay. So here is the inflation. There's a year-over-year chart, and we're sitting at the headline inflation is 8.3. Right there, 8.3. And over the next month, as we kick off October and we print September CPI, we need to see if this is trickling lower. It should be, because oil, if you look at oil prices, oil prices at 79.25, we continue to drift lower towards this yearly pivot. Lower oil is lower energy costs, lower gas at the pump prices. All these things have led to a retreat in the headline CPI. So that's a good thing, but we'll find out. There's just a lot of things in the air right now, right? A lot of things in the air. ECB president speaking. Okay, Christine Lagarde speaking. I didn't know that. All right, if you have a link to that, go ahead and post it in the chat. Okay. All right, let's get into some other stuff. So we did the dollar index. We did oil. Let's take a look at gold and silver. So gold's at 1644. We just broke those lows. I am going to look to see on the higher time frame. So I don't quite have the divergence I'm looking for. I was looking to see if gold, man, that dollar is just ridiculous. A lot of this was, dollar strength was creating gold weakness. I still think that gold is a pretty solid play. I was looking for some divergence here. I'm just not seeing it. Oops. So I was looking for oversold conditions on the weekly. We're not quite there yet. I do see a slight disagreement with price, but I'm like grabbing onto that. So I'm not going to say it is. If it doesn't print based on my indicator, then I don't have it. But what would be interesting this week is if gold closes back above, 1676, I could see us putting in a bit of a short-term bottom here on gold. But it really is going to be a factor with the dollar. Silver trading at 18.85. I do like silver as far as longer term. I'm willing to take this down and really load up on silver around $12. And then copper, another one that I'm watching really closely. So copper looking like we're coming back into retest of lows. Let's go to the higher time frame here. So where could it go? Well, we had this big flush down from our big commodity crash back in July. And, is this high to low, lower high to lower low? Do we just continue to trickle back down to past levels of support? That puts us around $2.50 to $2. Longer term, I think that I would be very bullish on copper in the 250 or less. 250 to $1.50, I would stay long on copper, even if it's a range trade. And that's one thing that I'm preparing for the next 12 months is if we have opportunities like this to trade, let's say that this flushes back down towards $2 and then gets back to 3.5, right? What is that from a percentage basis? I mean, that's still a 76% move. So, I mean, when you look at stocks that can offer 25 to 50%, those are pretty good moves, at least in the short term. You offer 70, 80%, that's amazing. And then, in the bigger picture, you offer, let's say, 300 to 400% upside. Depends. I mean, I think that tech is going to struggle over the next 12 months unless we see just a super pivot from the Fed where growth is all of a sudden the name of the game, but we don't have that right now. So anyway, I just think we have some more range opportunities here. Take a look at this channel. Support. So we could find some support around 250. So I would look for that, copper wise 250 here and then back up to some fresh highs. That'd be a pretty awesome return. That's a 2x right there. That's 100%. So from there to new highs, that's over 100%. So I like those opportunities on some of those plays. Bitcoin is trading at 19,102. Got a lot of stuff in this chart. So let me go down the daily time frame. Bitcoin will be tied to the dollar and risk appetite. So if the dollar is strengthening, Bitcoin is going to continue to get softer. A rally in Bitcoin would come with a weaker dollar and an equities rally. How do we get it? A weaker dollar. I really think the dollar is going to have to be a big catalyst here. If the dollar gets softer, then we hold these support levels. We start to head back up. I think crypto is going to have a hard time right now. There's tons of regulation that's in the works from U.S. government, from other countries. I mean, it's not going to be easy just to say that, yep, crypto is the future. Bitcoin, everyone adopts it. I mean, there's going to be a lot of competition between the traditional fiat system and crypto, or Bitcoin. But I mean, holding the technicals here at 18,000 is pretty encouraging. Do I think we can come back to 23, 24,000? Sure. And we have some range bound trading here. And then if we see some positive news and some risk appetite, then sure, I can see some recovery happening later. But I think we're going to spend some time carving out some lows. Okay. So watching that closely, watch that 18,000 level. The lows that I have here is 17.7K on Bitcoin. Ethereum. So are you saying, when you say parabolic on the dollar, are you saying dollar strength? I mean, I've looked at it. I'll look at the DXY in just a second. I mean, I've got the DXY potentially going up to 120, 115, 120. Those are big levels. That could be, parabolic. But I'm telling you, I mean, at the end of the day, a currency chart is still going to balance. It's going to be interesting how it plays out. I mean, the dollar is also a super liquid basket. So I also think why we're not seeing flash crashes necessarily. We just see a lot of inflows in the dollar. But I will say this, when the markets are ready for releveraging and the markets are ready for risk appetite, the dollar is not going to be the play. So I think that the dollar is going to weaken hard whenever the market decides to find a bottom. When equities find a bottom, we start to rally, the dollar is going to get weaker. So I am playing that where, that's where I'm looking to time it. If I want to find a top in the dollar, I need to find a bottom in equities or vice versa. Okay. Ethereum, we have our proof of stake right here. 1317 major support around $1,000. And again, probably a long time with some range trading and carving out some lows. Stock wise this week, 9:30 expirations. Mostly it's just a bunch of covered calls. Let me see if I have my notepad here. I do. Let me find my little file. So the notes from last week right here. All right. So I'm just going to reviewing, all the different accounts from A to Z. And if I have to add additional covered calls, I will, and do my best. A lot of it's credit spreads. Tons of credit spreads open. Took assignment last week on KHC. I am hanging on to that one. And then few and far between. A lot of them, if we get assigned early, brokers will tend to do this with high volatility too. Brokers assign you early and you don't want to own the stock. Hopefully you know what to do. It's pretty easy. So I'll just throw this out there if anybody's option traders. If I have I did KHC. So I sold a $40 put and I bought a $37.50 put. The broker assigned me at $40 and the stock was down at 34. So I still have my long put that's in profit and I'm still keeping that long put open because if the price continues to drop, I'm going to use that long put to, number one, be profitable. Number two, take assignment and try to follow that assignment as low as I can to price. And so even though I'm assigned at $40 with a long put, my break even is going to move down the price. So if I take assignment, I'm hopefully going to stay within maybe 50 cents to $1 of the actual price, and then I can go in and start doing some covered calls and repair it. So I'm going to leave it open because it was assigned way early. I got assigned almost a month ahead of the expiration. But a lot of my trades right now in options are credit spreads, and that's good because it's a nice neutral way to play it. If the market falls, I have the long put side for some protection if I want to take any ownership. Otherwise, I just take a bunch of small losses on credit spreads that didn't work. But I also have a bunch of staggered credit spreads, and our expirations go out to November, December, January, February, March, and I'm just giving the market the time it needs. We knew this in equities on demand. We didn't want to be super aggressive in August. We didn't want to be super aggressive in September. If we're going to look for something to be aggressive about, maybe it's October with a Q4. Historically speaking, Q4 is a good time. What does the market do for this year with a November election, a midterm election for the U.S.? I don't know. Maybe it waits until November to show some optimism. But November, December, January, carrying over into Q1 next year, if there's any relief rally, there's any, rally on bad news, I'll be watching for that and looking to be more aggressive in stocks and options. All right. Let's take a look at some other currencies. I'll just flip through. I'll go another maybe 5 or 10 minutes. Aussie CAD, it's fine. Aussie Swiss, stabilizing. Aussie Yen had a good short-term sell trade. Traders in the flex room were shorting it up around 97, 97.50. Worked out really nicely. Looking for a trade here. So we did get filled at 1,400. So I'm watching. My break even should be around 12.50. Let's see. No, 12.25. No, is that right? Let me do the math. 11.50, same trade size. So 11.50 and 1,400. 11.50 and 1,400 divided by 2. So 12.75. Yeah. So 12.75 is my break even on the Aussie New Zealand right now. To the downside, I'm shorting Aussie New Zealand. Aussie dollar. I didn't have a buy trade. I have a buy trade in around 6,000. I just put a big level there at 6,000. Still going to wait. CAD Swiss, holding long on CAD Swiss got filled at around 71.25. That worked out pretty well. CAD Yen, nice little short trade. Swiss Yen, we're at 145. I talked about this last week in the Mind Over Markets events. We have these big news candles from that JPY intervention last week. So I'm watching for some follow through. We have this high, we have this low. All right. So if you measure this, I'm looking for a projected move. You have this high to low and project that move lower, project that move higher. Whatever we see with a breakout, if it breaks lower, project that move. That should be a nice short-term profit target. This Swiss Yen was like a 700 to 800 pip move last week. So there's a lot of good potential there once we get outside of this candle. So right now it's trading with an inside candle because it's a massive news candle. Everything's inside of it, but I'm looking for a breakout, hopefully to the downside because we're sitting at these all-time highs. Euro Aussie, I don't have a trade run on that one. Euro CAD, nice little bounce. Euro Swiss at 95.45. So this flushed down towards 94. I have levels at 92.50 and 9,000. I'm still looking at 103.50 for a big finishing point. Euro pound, like I said, lovely little flash crash move that I got filled right at the top. 92. I mean, my entry was 92.50. I got filled at 92.63 with a high at 77. So really fortunate on that fill, and it's a nice profit. And I'll take it all day. I'll put another one to reload that trade. Euro yen, we shorted this one around 143, took profit at the pocket. That was a nice little trade. Euro New Zealand's a lot like the Euro Aussie, still pushing higher. Euro dollar, we're at 96.68. Again, big bar count. We're at nearly 300 bars. Let me go back and confirm that. So I think we go, yep, there we go. So we go back to this little wick high in September of last year, and we stretch to current price. We're sitting around 276 bars. So on a daily time frame, that's quite a bit. This was a decent little flush to the downside. Now again, all we're going to see is this past support. So we just pull back to here, past support, and we flush down again, and maybe this trend stays, right? Maybe this just starts to open up. If price breaks this side of the trend line, we're pulling back and we'll have a correction. Any correction on the dollar, I'm looking for a 1, 2, 3 wave move. That's it. But in order to get that third wave and be confident that we're going to go higher, I would like to see, a structure level get broken. So in this case, resistance on the euro dollar get broken would be nice. Okay, pound crosses, big flash in the pound Aussie. You know what? I feel like, did we put a pending order in on pound Aussie? Look at some of these technicals. That would have been nice. Did anybody buy, we talked about this in Flex, did anybody buy the pound Aussie at 6,000? That was one trade I didn't have. Obviously, I'm a little mad now, but that would have been a nice pending order to put out there just in the distance. But man, 1.60, you'd be up to 700 pips right now. Technical flash crash. Crazy, but I didn't get the trade. I certainly wish I would have. That was the level we talked about in Flex. So it is what it is. Pound CAD, 48. I did get a trade. Let me check this one actually. My pound CAD. Pound CAD. Do I have some non-FIFOs running? 0303. Yeah. That one's kind of ugly there for a second. I'm going to look to see if we come back and fill a pocket. So 03s. Yeah, that pound CAD is going to have to do some work. So we officially on the pound CAD, I don't think we've gone any lower historically. So let me go pound CAD with an IDC feed. There's a weekly chart, and this price goes back to, we have lows back in 84, lows in 2010. It has never been lower. So what would be kind of nice to see on the pound CAD would be we pull back into this level or this level, or past support over here. So if we're putting in a nice little bottom, I'm looking for a bottoming formation. Let's come back towards like 5,500 to 6,000 on the pound CAD. So I'll be watching that one over the next couple of weeks to see how this pound recovers. Pound Swiss, big flash crash low, that's pound CAD. Pound Swiss, flash crash low, just off of parity. Let me check this one too. So pound Swiss, I didn't quite get filled at parity. That was my pending order. Yep, 1.0050. It was just off of that. But I do have some non-FIFO trades running right now that are in profit, so that's fine. I'm going to keep a close eye on that one. Pound yen, go to the daily time frame. Let me get back to my YouTube feed. Morning Don, TDRA. Sure, I'll take a look at that one. Yep, I'll take a look at TDRA. Let me get through some currency here. So pound yen, all this was continuation. Traders were already protecting profits. If you had a trailing stop loss, that would have been perfect, right? So if you shorted it with us last week in the flex room, we shorted at the high. We had a sell stop order. I took some profit early on prior to the BOJ intervention, but man, they just came all the way back down to where we said that low, and it bounced. So a trailing stop loss would have been perfect last week if you kept it in on Friday. Pound New Zealand's big flash to the downside. Take a look at this one. Look at this horizontal line. 1.83, 1.80. That wick low was 1.8150. Again, look left on your chart, higher time frames, there's structure there. So anyway, pretty good, pretty awesome. It was ugly. That's obviously flash crashes are never easy, but when they work out in the higher time frames, you're like, I can trade those bigger time frames, which is why support resistance is always a dominant force in the markets. New Zealand CAD still holding, New Zealand Swiss, waiting this one out. See, I'm just gonna buy this one around 5,300, 5,350 or so. New Zealand yen, this is an awesome trade from the last couple of weeks. We shorted at the highs at 8,700, came all the way back down to 8,200. Great trade on that one. New Zealand dollar, looking left on this one, and we come back into lows from the COVID crash at 5,500. I have a pending order of 5,500. Dollar CAD, we're at 36. This has gone parabolic. Now, I have a couple of small orders in, 3,300, 3,350. I'm still looking for this to pull back and balance around 32.50. But the reality is this. Trader emailed me last week and says, Chris, is it ever coming back? It's like, yeah, it should. It's just when. This level here is some pretty nice past support becoming resistance around 1.39. And then we had a, kind of a flash crash move there at 44 to 46. So I'm interested in another position here and another position here to just hold. I mean, 33.50. So there's my break even. So if I add it again, this is going to be my break even. Add it again, this is going to be my break even, and I trade it back down. So I'll turn my dollar CAD into a bit of a position trade, which I'm fine with. That's why I trade small. Okay, dollar Swiss. We spiked up to around 99 and change. I'm looking for a chance to sell this one if we revisit the highs at parity, 1.00. Looking to sell that dollar Swiss. Dollar yen. We're trading at 144. We're still trading inside last week's BOJ candle. So there's your high, there's your low. Watching this closely, very closely. Some of the exotic crosses, it's been favoring dollar strength. Dollar krone is up. Dollar Singapore is up. Let me take a look at this dollar Sing. Something like 144, I thought. Yeah. There's a lot of support up here, or resistance around 145. Man, there's a lot of good technicals for dollar weakness. Resistance there, support there. Dollar Sing is not something I always trade, but I did trade it, since I lived in Singapore around 130 and 140. I'm a little hesitant to jump in and short it at 145. If I do, I'd probably have a stop loss. But I'm looking for some opportunities there. Turkish lira just continues to run higher. At some point, this will correct. I'm just going to keep bumping up those sell stop levels. Dollar South African Rand. If we come back up to this crazy high at 19 or 19.3, considering some of these exotics to sell. But dollar index still running hot. 10-year note. Some divergence here at the 127, but I just don't know how technically obedient this is going to be. The markets are clearly pricing higher rates. We have an inverted yield curve where the 2 years above the 10. The 3 month is pushing higher. I mean, we have all these crazy records being broken at the pace in which these yields are rallying. So just be careful on the old dollar stuff. It's hard to call the top or bottom right now. But Wall Street's open, and we open flat. Let's keep an eye on everything, and we'll go from there. So it's been about 45 minutes. I'll let you all go. TDRA, let me take a look at that one for you really quickly. TDRA, cup and handle. I don't even have a symbol for it. TRDA, sorry. TRDA. This is therapeutics. This is biotech. And daily chart. It's not really a cup and handle, man. This is more like a head and shoulders opportunity. If I'm looking at the same chart you are, there's a high, and we're forming a high right here. So if this is a left shoulder head to neckline, it's kind of a tough one. So unless this is an angled head and shoulders like this, where this now is maybe stretching and breaking the neckline, and we could be heading back up. What I do like about this trade, just looking at it now, I mean, we have some pretty solid lows around $6. We measure this move. We have a yearly pivot sitting around $22. So, it's been pretty choppy right now, but as long as we kind of maintain the upside, I'd say that $20 to $22 looks like a pretty decent profit target. That's just what I'm seeing on the technicals. So that's all I have. If you do me a favor, click the thumbs up button for me, like the video, like the session, support the channel. I appreciate that. And we'll be back on Friday for another weekly outlook recap, rather. This week in trading, Flex Trading Room, Tuesday, Wednesday, Thursday. We're going to do our sessions at 9 a.m. Eastern time, since I'm still operating here in the mountains. So just different. It's an early morning. It's like, I'm here at 7. So anyway, 9 a.m. Eastern time for Flex, and 10 a.m. for Equities on Demand, Monday through Friday. If anybody's interested in those trading rooms, if you'd like to trade with me live for a month, guess what? You can do it for $27. So my website, pulverreport.com, check it out. And you go to systems. Number one, you can join the newsletter. That is a top weekly pick every week. Go to systems. There's robots and systems and courses right here if you want to buy. That's great. And then trading rooms. You want to trade with me live. Flex, Tuesday, Wednesday, Thursday for Forex. Equities on Demand, Monday through Friday for stocks and options. Thumbs up, thumbs up. All right, everybody. Thanks for being here. Have a great week. I'll be with you in the trading rooms, and see you back here on Friday on youtube.com/Chris Pulver. Okay, thanks, everybody. Bye.